things get more complicated. Hi, I am Ahura, and in this short video, I'm going to look at the most important events and financial data in the week ahead. Stay with me. China started to withdraw its COVID-19 restrictions, but the conflict in Ukraine got more complicated. Russia cuts the gas supply for European countries one by one. Add them the latest tensions between the EU and UK about the Brexit deal and the British decision to rewrite the Northern Ireland Protocol. All of these is compounding the concerns about the economic growth and stagflation. On top of all financial data, after a 2-year break caused by COVID-19, the world's political and business elites will get together in Davos on Tuesday. Number 1, US home sales. This Tuesday will be a hectic and volatile day, so you must be so careful about your trades. US housing data will be one of these. Housing prices have constantly increased with scarce materials, labor shortage, and higher input prices in past 2 years. And now, higher mortgage rates, which caused an 11.9% decline in the mortgage application purchases index, are making that even worse. These higher prices finally ended with an 8.6% decline in March. For May, estimated for the new home sales show another drop to a 750k unit pace from 763k previously. Estimated data should not be positive for the US stock markets. Number 2, market PMIs. On Tuesday, we also have to watch the PMI numbers from the most developed economies closely. Japan, Germany, France, Eurozone, UK, and United States all have to publish their Purchasing Manager Index. Unfortunately, for most of the mentioned economies, it's expected to decline from the previous month, which should not be favorable for any of their stock markets, and most probably will hold the pressures on the euro. Number 3, RBI's monetary policy meeting. After 50 basis point rate hike in April, it's expected to see a hawkish tone again in the statement. With this perspective, that inflation will cause another 50 basis point rate hike by the Reserve Bank of New Zealand in the May meeting, which would bring the official cash rate to 2%. Headline inflation rushing to 6.9% year-over-year from 5.9% in the fourth quarter to prepare all reasons for such a snappy move towards stricter policies. Kiwi must get some support after this meeting against its crosses. Number 4, US durable goods order and FOMC meeting minutes. While you're expecting to see another unfortunate decline in the orders, FOMC will publish its May meeting minutes. Fed Chair Powell and other committee members also will give a speech during the week. It's expected to hear again that the lower demand in the following months will help the inflation decline, as they used to say last 2 weeks after Fed May meeting. The US dollar should get more substantial with the estimated data, and Nasdaq should withstand more pressure. Number 5, US GDP. Gross domestic product as the most critical economic index is always important, especially in the United States. The US GDP is expected to shrink by 1.5% in the first quarter. We could see more imports in the first quarter with the higher US dollar rate, resulting in a significant deterioration in the trade balance. With the higher inflation and negative GDP numbers, stagflation fears will increase and pressure the US leading indices. And finally, number 6, US personal income and spending. Even though the latest CPI numbers had some signs of peaking and softening inflation, it is still so high and already caused a 4% decline in the personal income. On the other hand, data shows that the personal saving rate slid to 6.2% in March, which means that increasing retail sales despite the higher prices in the last months probably got to the point of being reversed. For April, spending growth is expected to fall to 0.7% from 1.1% in March. Thanks for watching this video and hope it's going to be a productive week for you.